Well, joining me now is mortgage broker and wealth manager Riz Malik, who's also the director of the independent financial advice firm R3 Wealth. Thank you very much for being with us here. Now, let's delve a little bit deeper into the issue of falling prices. It comes against a backdrop of rising mortgage rates. That's got to affect how much people can actually afford to spend on a house. But there's got to be other reasons too. What is behind this tempering of demand?
Sure. And as you rightly pointed out, one of the big reasons is the conflict in Iran that's pushed up energy prices, and subsequently the outlook of future rates is a lot higher. But it's not just that. In the UK, we've got a lot of economic uncertainty at the moment. We've got businesses, a lot of whom are struggling, and not a million miles away down here in Downing Street, we've got a potential conflict and we could have a new Prime Minister. All of these things feed into uncertainty. And what do people do when they're uncertain? They sit on their hands, they don't make big financial decisions, and all of these factors now are feeding into exactly what you've just shown in your video.
And when you look at it at first glance, you might think, well, houses are cheaper, that's good news for first-time buyers, but it's a little bit more complex than that, because here in the UK in particular, comparing it to other equivalent countries, the housing market is a real engine of the economy. So if there is a slump, what would the wider effect be?
Well, there's a big knock-on effect within the whole of the United Kingdom economy. We've got developers at the moment who aren't developing, they're not building houses. Those developers would have created jobs. If people aren't moving, it's all the other industries that feed into the UK housing market that suffer as well. If you were moving, you might go and buy loads of new furniture, which obviously has a positive impact on the retail sector. So property in this country, if it continues the negative trend that we're seeing at the moment, could have much more devastating consequences in the whole of the rest of the United Kingdom economy.
The backdrop to all of this, the Iran war, still not settled, but stay with us, Riz Malik, because we're going to talk in a minute. Well, Riz Malik, mortgage broker and wealth manager, is still with us. Now, following from Jonah's report, the most obvious question here for me really is, why is the fixed rate in the UK, say, on average 2 years, whereas Jonah's example, Germany, 5? What's behind that?
We love short-term fixed rates in the United Kingdom.
Why? Why do we love it?
Great question. And I've been in financial services now, I know I don't look old enough, for about 25 years, and 2- and 5-year fixes have always been very popular. Let's go back until the credit crunch, where we saw rates come down to a record low level and sit there for a very long period of time. What happened in this country? We saw property prices continue to go up. So with short-term fixes, people would fix for 2 or 5 years, hoping that after that period, the value of their property would have gone up and they could have moved, or they could refinance, pull out the money and then go and maybe invest in another property. That's the reason why we are at that stage. Now, there are a few lenders that have tried to change that in the United Kingdom, but so far they haven't been successful. Even I've had conversations with clients and they just cannot get their heads around the long-term fixed rates like they have in Europe and like are very common in the United States as well.
Interesting. But by international standards, it's important to mention the UK housing is expensive. Britons spend a really large share of their income on their homes. Why is that the case here? Because
we live on an island and we are not building, nor have we been building houses at a fast enough rate that we need to. Every government that I can remember, and even the current one, has set housing targets that very clearly they fail to meet. And without greater housing stock, and that's affordable housing stock, not 5- 6-bedroom houses, but properties for people to start on the property ladder, until we have those, it doesn't feed into the rest of the market. You have to remember, for someone to move up the property ladder, someone needs to come on at the beginning. And that's really where we're struggling. We need to build more houses in this country. It hasn't happened. It needs to happen.
Well, Riz Malik, stay with us because we're going to have a look at another aspect of the housing market, and that is that British mortgage approvals actually rose to a 15-month high in April as people try to lock in better rates before the war in Iran drives up borrowing costs even more. Now, the Bank of England says 65,945 mortgages were approved in April, and that's almost 2,000 more than in March. Now, Riz Malik, you're still with us. So people who can afford to have secured a good rate, not everyone can, of course. But there's another interesting aspect to this, that London has always attracted international buyers. What's happening with that now?
London continues to be London, and it still continues to attract people from overseas. Because for a number of reasons, the regulatory environment here, if you own land, you actually own the land, the legal framework that we have, the fact that a lot of people send their children to the UK, not only just London, for their education and everything. London is still London at the end of the day. And we're still seeing buyers from America, Asia, the Middle East, still wanting to secure property over here. Don't get me wrong, it has been harder because there are more taxes for overseas buyers and even expats who want to buy property in the UK. We deal with quite a few of them, but London hasn't lost its charm. And one could argue at the moment, if prices do take a bit of a dip, now is a good time to come and invest.
The UK capital retaining its allure. Well, Riz Malik, thank you so much for all your thoughts and all your insight. And